Hello, this is Dave, and welcome to Equity Story. Thank you for all those nice emails we had congratulating us on winning that award. Um, Again, it's a little bit muted today in the office. The market is really tough at the moment, and obviously having a few gold plays getting hit today wasn't the best thing. But I think all's not lost, and I'll go sort of through the stocks at the moment, and certainly with some of the trending stocks, generally speaking. Uh, BAP again doing very, very well today in a really, really tough market. I think it was up 2.13%, and again just holding that beautiful trend. Um, Again, you can buy more stock at 585, so definitely if you are in the stock, I suggest doing it. The trend looks very, very strong in a difficult market. Sigma hit record yearly highs today, so again I think that's pretty bullish. FXL again holding above the long-term trend line, looking absolutely fine, got no issues there. FPH, why we've entered in FPH, one of the best trends. We've tried to stand some of the best trends in a pretty difficult time at the moment. ORE again really fighting back and always bouncing off that long-term trend line, and again fundamentally this company is going to make a lot of money next year, so certainly definitely happy holders. And obviously Vocus is down on its knees, but we do think around these sort of levels it's good buying. So it's good to see management the other day putting buying $1.5 million worth of shares. I think obviously that's a sign when you got management coming in trying to pick things up, they're believing it's cheap. And there's good news coming out of Vocus. So, they're growing their users by 22% since June. There's nothing wrong with the company. I think it's just market sentiment, and hopefully it won't be long. I think when this does bounce back, it's going to bounce back pretty quickly. I think the story of the day is obviously gold, and gold's got absolutely hammered. And when you look at gold, it's still coming back. It's holding above the Northern Star, that long-term trend line, and so obviously is evolution. So we put them on hold, but we're happy to hold these stocks. We are believers in a pretty tough market in gold, and I think that's a section I just want to examine a little bit more today. So if you want to here's basically a bullion chart, a gold chart, and you can see back in June we did touch this sort of 267-ish level, and I think around this level it's pretty important we can hold around these levels, and then if we can, obviously we can work our way back up. Otherwise, gold could, in the short term, and gold is pretty volatile, could go a little bit lower. So, I've had a few calls today, Dave, should I buy? And I think yes, but what you should do is just watch the gold price. You can see it turn back over sort of up 280, 285, which you could easily do in this environment. And then certainly I'd be buying Northern Star and Evolution and other gold stocks, obviously, that you might like. What I want to do is, there is a reason we have been very negative of the market, and we have been selling stocks, and we have sort of been implying the importance of having cash at the moment, and we do feel that there is, and you can feel it with the trending stocks, you can feel it with all the stocks in the market, you can see it the way all the ASX 300 stocks basically have moved today. The market is really straining to go high. It's really hitting a brick wall every time. And I think the market's telling you that it's got real exhaustion. And generally speaking, in this sort of environment, sort of gold does well. And it's important to understand there's no question about it, America is a big bubble economy. And for the last 2 years, Equity Story, as we've traded it, we've tried to be aggressive as we can. We've taken profits pretty quickly. Why? Because we never really trusted the market. And you know what? We do a lot of research. I mean, I'm a historian by degree at university, so it's very important to research and always look what people are saying and take every side point of view. And tonight I'd just like to introduce you to obviously an economist in the States, that someone a lot of us do know, but some of you don't. And the guy's name is Peter Schiff, and why this guy is quite very interesting. He's generally always right on his general concepts of the economy. I think what he fails to do, and if you listen to him, you wouldn't have been in the market and trading it like we have the last 3 or 4 years. He tends to, I think, certainly see where the bigger picture is, but obviously the bigger picture and the way stocks can move can take years. It doesn't happen in days. But I'll show you and some interviews that he did back in 2006 when he was trying to explain to some pretty well-respected economists that there was a serious property bubble issue in the States. Here's Peter back in I think 2006.
The housing market is just beginning to unravel. We're seeing the tip of the iceberg here in the mortgage sector, but probably...
How do you put together all this gloom and doom? What data tells you this, Peter?
Well, aren't you looking at the news reports coming out of the mortgage market?
I'm in the middle of it, yeah.
Yeah, aren't you looking at the glut of houses on the market for sale with no buyers and the collapse in the subprime market?
Well, I wouldn't call it a collapse in the subprime market. There's been some difficulty in the subprime market.
Well, it's just starting.
I'm also looking at housing prices, which have had an orderly decline. I'll tell you something that makes a lot of sense to me. You talk about the collapse of the NASDAQ and that incredible bear market that we had. Those are usually once-in-a-lifetime events. And you're suggesting that in very short order, less than 10 years later, we're going to have another one?
Well, in a different asset class, sure, in real estate.
I think tax increase coming in the next couple of years. Monetary policy is spectacular. We have freer trade than ever before. And not only that, but there are no incomes policies things here. I think Peter's just totally off base, and I don't think it's going to be... I just don't know where he's getting his stuff.
Well, one of us is off base, but it's definitely not me. It's not wealth that's increased in the last few years. We haven't increased our productive capacity. All that's increased is the paper values of our stocks in real estate. But that's not real wealth, no more than the NASDAQ was wealth. When you see the stock market come down and the real estate bubble burst, all that phony wealth is going to evaporate. And
I think it's fascinating when people stand up for what they believe against what the general consensus is, and this guy did that back in 2006, and he did it in 2002, and he's always been proved right. He's a little bit doom and gloom, but he is now, and I think he's been sort of basically touting this whole bubble scenario for the last 6-7 years. But in that time, companies like Equity Story, we've been able to sort of go in the market and make money out of it. But what he normally says at the end of the day, this guy, he sees the story very early, and he's generally right. And I thought I'd just play to you his take. This is a month ago on where he sees things going just at the moment.
What is your outlook for the rest of 2016 and, of course, looking ahead to 2017? Final thoughts and solutions for the American people?
Well, I think the economy continues to deteriorate until it eventually deteriorates faster, right? That's the direction we're going in. I don't believe we've ever really recovered from the 2008 financial crisis. I think all we did is blow a bigger bubble, but we never had a real economic recovery that raised the standard of living of the American people. In fact, the average American is worse off today than he was when the recovery started. And we've never had a recession that was worse. We never had a recovery that was worse than the recession that we're recovering from. And I tell people all along, if you thought this recovery was bad, wait till you get a load of the next recession, because this was the weakest recovery in the history of recoveries. And I think this next recession could be the worst recession ever. It'll certainly be worse than the Great Recession that we had in 08 and 09. And in fact, it may even be bigger than the Great Depression that we had in the 1930s. And so we're going to have to rename that.
I think again, it's very interesting what he's saying, that this recovery is extremely weak, and it's one of the reasons that Equity Story, we do like obviously having gold in our portfolio, and when you look at this bubble economy, certainly when these interest rates start going up, I think you'll see that the interest rates go up could potentially prick the bubble. So either way, if the world economy the bubble gets pricked, we can see obviously gold doing well. And if the Fed decide to keep interest rates at record lows because they know they're in a mess, then we can see gold doing well as well. So on the medium to longer term, we think either way gold is a great place to have your money. And yes, at the moment we're trending some gold stocks. They, a little bit of sentiment, they got hit. I don't think it's long before these gold stocks are going to be back up and giving us some decent returns. Anyway, I'd like to thank you for listening to Equity Story, and good night. And I look forward to bringing you the report tomorrow night.